Hi, my name is Henry and thank you so much for tuning into our video today. In this video, I'm going to outline to you how I mark up trades and get into the market while also maintaining a full-time job, helping traders to learn how to trade and also make money off the financial market. So if you are a new trader or you're a trader who's struggling with finding consistency in the marketplace, this video is going to help you. So right here, the first thing I do is to go to monthly time frame. I mark my high and my swing low right here to determine my premium position, being this high right here. This key level right here is my premium, and then this right here is my discount. So if I wanted to look for a buy, I'll be looking for buy in discount. If I want to look for a sell, I'll be looking for sell at premium position. So I'm going to write down my chart as well. Right here, we have the premium. And right here, we have the discount. Now, the next thing I do is to go to the weekly time frame. And on the weekly time frame, as you can see right here, we have this inefficiency. And as you can see how nicely price tapped into that inefficiency. And after tapping into the inefficiency, we started to see this rejection of that key level. Then the next thing I do is I go to my daily time frame. And on my daily time frame, as you can see on the daily time frame, price created this higher low, a higher high, a higher low, and a higher high. So the daily time frame is showing us bullishness in the marketplace. So we're anticipating for price to continue going to the upside. But in the meantime, we will be looking forward to sells for price to go to the downside, selling to the downside, and then we're looking for opportunities for price to come into our key level down here for us to now buy and continue to the upside. Now, one of the reasons that is going to bring price to the downside, number one, is this inefficiency. And number two is this key level right here, because this was the last move to the downside, took liquidity, and then we had this expansion. So I'm going to box this key level. And as you can see, we haven't reached this key level so far. So until we reach this key level, all we'll be looking for is for price to go to the downside. And I'm going to show you how you can actually have a full-time job, or you can be looking after your kids or whatever your activity or your school. You can still get into beautiful trades that will yield you consistent profit. And we're going to start from this high, and then we'll take it down to this low where we are at the current price action. Now I'm going to use the bar replay, and I'm going to take us right here. So you can recall that this high right here, we had the inefficiency on the weekly time frame. You can see that the inefficiency right here on the weekly time frame. So the moment price taps into that inefficiency, all we want to see is a rejection from that key level. Now we'll go to the 4-hour time frame. We want to see what is in that key level. And what do we see right here? What we see right here, we can see an inefficiency resting right here. So I'm going to mark that out as well. And this was also the last impulsive move to the upside that took liquidity from here, drop down, breaking structure. So once price taps into this key level, I want to see a 15-minute shift to market structure from this position. Now we go to 30 minutes, and then from 30 minutes, the next thing we'll do, we'll go to 15 minutes time frame. Now on the 15 minutes time frame, you can see price made a low right here. And then we created this high right here as well. And right here, we have a break of structure. Now, this was the last move to the upside that took liquidity before dropping down impulsively to break structure. And that is where I'm going to be placing my limit order. Right here. My entry is going to be here. My sell limit order is going to be here. And my stop loss is going to be right above this high. So this is something that someone that has a full-time job or you have engagements, all you need is to mark out these zones from the higher time frame. And once price comes to this key level, all you want to do is to wait for a 15-minute shift to market structure. And once you see a 15-minute shift to market structure, you can place your buy limit or your sell limit order. Price comes in there, just very nicely activates you, and then runs straight to your take profit. So we're going to go to the 1 hour time frame, and where we'll be anticipating is an inefficiency where price will come to, and right here we'll have this inefficiency, and that will be our take profit level. And as you can see right here, place that 1:4 risk to reward ratio. So if I was risking $50 or $100 on this trade, I'm anticipating to make 4x my risk. So if I'm risking $100, I'm anticipating to make $400 on this trade. And as you can see right now, price is heading straight down to my take profit. So even if I'm working a full-time job, I'm just going to come back home, and then I'm going to see that my $100 risk that I put on the trade has made me $400. So I'm going to show you another example as well. So you can see this basically didn't even take me up to 5 minutes to run down the analysis. And when you go through my course, you will see how you can independently do this while holding a full-time job, or even looking after your kids, or going to school, or whatever engagements that you do have. So the same thing that I did, I'm going to do the same thing again, looking for more opportunities. Now, the next thing I do now is I'm going to go to the daily time frame. And on the daily time frame, you can see the previous trade I got into, this right here was my exit position. And you can see after price slammed through that, you can see we have another inefficiency right here. You mark that out as well. All you want to see from this inefficiency is a 30 minutes or a 15-minute shift in market structure. Now we'll go to 1 hour time frame. Want to see what's happening on the 1 hour. Now you can see on the 1 hour time frame right here, price created a high, then created a low, took liquidity off this previous low, created a high, a low, a high. This high didn't go above this high, so this was basically a range consolidation. And then we came here, you can see price created this low, created a high, and we saw a break of structure right here. So all you need to see is a break of structure from your key level, so you can mark this out, go about your day, go about your job. Once price breaks a 15 minutes or a 30 minutes or a 1 hour structure, all you need to look for is this inefficiency right here. You can see that very clear and very clean, and that will be your entry position right there. So you put your trade right here, and then your stop loss above this high, and then targets. You can go to the 4 hour time frame, and then you look for potential inefficiencies where price could run into. So right here, you can see we have an inefficiency right here beneath this key level. You can use that as your take profit position. That is a beautiful 1:3.61 risk to reward ratio. So if you were risking $100 on the trade, you would have made $360 profit on that trade. So this is the second example, and I'm also going to show you the third example as well. Now you're looking at this key level right here. You can see the inefficiency. Now you mark the inefficiency right here. All you want to see from this key level is a 15-minute shift to market structure. Now we scale down to 15 minutes time frame. You can see that right here. This is the key level. Price tapped into it. This is a low, a high. You can scale down to 15 minutes time frame or 30 minutes time frame. You can use any one. But if you go to 15 minutes, you're going to see this low is present. We're currently on the 30 minutes. The low is still present on the 30 minutes time frame right here. You can see that price came into this position. We had this impulse move to the upside, took liquidity, drop down, breaking structure. We have an inefficiency right here. That will be your entry position. You just put your sell limit order right there, and you go about your day. And then right here, you put the limit order right here. And then your stop loss is going to be above this high. And then you can target this low right here. And that is a 1:2. Or you can even just target this inefficiency resting right here. And that will be your take profit position. That will deliver a 1:2. You can basically just take a 1:2 risk to reward ratio. But as you can see, price ran the lows. So if you had used this inefficiency or this low, you would have made profit. So if you were risking $100, you would have made $200. So this is basically a very simple way that you can make a few $100s to a few $1,000 trading the financial market. And if you found this insightful, you can click the link and follow it to buy my course. You can learn more in depth on how you can do this on your own. Thank you for tuning in and watching this video, and I'll see you in the other videos. Have an amazing day.